Pipeline investors need no reminding that it's been a tough few years to be invested in the sector. Years ago, pipelines, or MLPs as they were known back then, generated reliable cash every year. They paid high distributions. These grew year after year. There wasn't a great need to build new pipelines to invest back in the business. The shale revolution changed that. Just as upstream companies were investing more money in producing more oil and gas, pipelines felt compelled to build new pipelines to service them as well. The result was a glut. It was a glut of oil. It was a glut of natural gas. Low commodity prices hurt the industry. Too much investment, both for pipelines as well as for oil and gas production, didn't earn an adequate return, didn't cover its cost of capital. And the result is that the pipeline sector's gone down, but worse, the S&P's been going up at the same time, so the relative performance has been very poor. The energy sector overall has done even worse than the pipeline sector. It's been a tough few years to be invested. But I think the future looks very bright for this sector right now, and I'm going to tell you why. Companies are spending less money on new projects. This is something that began in 2018 and didn't get much attention at the time, but growth capex figures, what pipeline companies invest in new infrastructure, has been coming down for the last couple of years, and that's a trend that's accelerated with COVID hitting energy demand this year. But they're still generating a lot of cash from their existing businesses, and so the result is less spending on new projects, same or more cash from existing business. That means free cash flow is growing. And free cash flow for the pipeline sector is on track to double this year, even with the hit to energy demand from COVID, and a lot of that's recovering. And it's going to continue to grow next year and as we go into 2022. This is helping some companies start buyback programs. And so there's quite a number of pipeline companies in recent weeks that have announced buyback programs as another way to return cash to shareholders. So the industry is becoming much more cash generative and much more inclined to return cash to investors. So now what about the election? The Democrats still have the House. It looks like the Senate's going to stay Republican, and we have a Democrat president. We have divided government. We have Goldilocks gridlock. I think this is a great environment for the energy sector. It means that we'll have more regulatory hurdles to new investment. Companies are going to be very cautious to make long-term investments in oil and gas production in the United States or to make new investments in pipelines. That new investment, though, is going to be combined with higher prices because Democrat policies fundamentally are about higher energy prices, because higher energy prices are what they'll get with their policies, but also it makes renewables less uncompetitive if oil and gas go up in price. Because the Senate's going to stay Republican, it means no Green New Deal. So all of the more extreme elements of the progressive wing of the Democrat Party are really not going to happen. So you'll have energy executives cautious about making investments, still generating lots of cash, with less places to spend that money, therefore more inclined to send that cash back to investors, which is what we want. So what about climate change? The elephant in the room on climate change is China. If we don't talk about China, we are not going to solve this problem. China burns half the world's coal. China produces 25% of all of the CO2 emissions. China is building nearly as many new coal-burning power plants as the United States has in existence today. China is where you have to go to reduce emissions. Nothing we do in the United States is going to have any impact unless China agrees to reduce emissions. And today, China is still planning to grow their emissions. And what about the cost of renewables? In spite of all of the hype about solar and wind, 2/3 of our energy for electricity in the United States still comes from fossil fuels. Solar and wind are less than 10%. And yes, they're growing, but it's going to be harder for them to grow as we go on, because even though prices are coming down, the intermittency of solar and wind is a huge problem to deal with. It's not always sunny and windy. What do you do when you don't have solar or wind power to turn on the lights? And so there's a comparison here on these slides that shows the cost of a natural gas power plant compared with a solar plant, which has to have natural gas to support it when it's not there. Or alternatively, you can have battery backup for that solar plant. That's even more expensive. Or you can have wind with battery backup. All of those combinations of renewables plus backup to get them to the efficiency that we already enjoy with natural gas plants makes them more expensive, makes them all more expensive, in fact, than the average cost of electricity in the United States today. It's why natural gas provided more additional electricity in the first half of 2020 than renewables, because it's cheap and because it works. So what you have is a pipeline industry that's growing free cash flow, that's going to increase above its dividend this year and continue to grow substantially in the years ahead. The pipeline industry in America is predominantly a natural gas business, in spite of all of the attention that oil prices get as far as moving pipeline stock prices. This is a natural gas business, and we have a very clear pathway to increased consumption of natural gas as a way of reducing emissions. In fact, the best thing we can do in America to lower our CO2 emissions is to phase out coal, is to use natural gas instead, and to look at natural gas as a complement to renewables, because the more natural gas we marry with solar and wind, the more we can get the benefits of those renewables without the intermittency. So I think the outlook for the pipeline sector over the next several years is very good. The yields are nearly 9%. Free cash flow is crossing that yield and is now going to be comfortably covering the yields. Companies are buying back their stock. We have Goldilocks gridlock in Washington, which is perfect for our industry. And so we are bullish on the pipeline sector today. I'm Simon Lack. We invest in energy infrastructure.